look up. Oh, we're going
All
live.
right, everybody. We are live for another installment of David Green Real Estate YouTube Live here on Friday, October 6th, 2023. David, how you doing?
Did we wear the same colored shirt on purpose, or did it just work out like
man.
that?
Yeah, it's like we color coordinated. We got the collar and everything going today.
Yeah, I feel awkward wearing it. T-shirts are much more comfortable, but hey, we're on camera, so every once in a while you gotta look good.
We got to look good for the people out there. So welcome, everybody. Hope everyone is doing well. We got a lot to cover today, David. We're going to talk a little bit about gas prices falling. We're going to talk about a warning from Ray Dalio. We're going to talk about Joe Biden. He's building a wall. We're talking about Fed rates stalling, and CPAs are starting to leave the industry hand over fist. So we got a lot of stuff we're going to talk about, specifically how this news impacts you, how it impacts the economy, and how it impacts your ability to invest in real estate and build wealth. So this is going to be a jam-packed session. I'm looking forward to it, David.
That is right, and we should get into it. You want to start with our first video here?
Yep, so we got a first video here from Ray Dalio. This is a longer video. It's about 12 minutes, so if you want me to pause it at any point, David, just let me know, and we will get it going. I can find it. 1 second. I got the video here.
Yeah, while Kyle is working on that, make sure you guys let us know in the questions anything that you have as we're going through the show. And if anybody wants to come in, let us know that too.
Absolutely.
To do this doomsday clock, it's got a sort of a doomful warning for Americans. Nearly 7 out of 10 of us, a little bit more than that, say there is no one they trust to save us from an end of the world event. But as my Florida director was reminding me, that means a little more than a quarter think, well, it's possible, but it just doesn't look too good. All right. Ray Dalio was weighing on this and all these events that sort of grip us and have us fearing. He always likes to say it's not about a single event. It's not about the President of the United States bragging about a jobs report. It's not about Congress and arguing over their new leader. It's all of that wrapped in one with a sweeping view of history. The world's richest man who rarely goes on record talking about this stuff, certainly on TV, just did so with me. Take a look.
Don't ever pay any attention to any one thing. The most important thing that any investor can do is to know how to diversify well, to achieve a balance. If you can achieve a balance in your portfolio, and I would recommend most investors not tactically listen to what some guy comes on, he says, I'm bullish, I'm bearish, you listen to that, that's not going to be a winning strategy. So to know.
What about people who look at the market and invest today and say, I'm a long-term investor, I believe in American capitalism, I'm going to invest in these markets long-term, I'm going to stick with the Apples and Microsoft technology. But what do you say to them?
Let me get my diversification point across first, and then I'll come back to that question. If you know how to diversify well, you could reduce your risk up to 80% without reducing your returns. So to know how to diversify, the one thing we know most is that what we don't know is greater than anything what we do know.
But where would you diversify?
Well, you diversify into different asset classes. There are things that where you underweighted, and then you diversify into different countries. Oh, okay. If I was to pick, we can get into how we could go to.
But for all of China's problems, you've diversified into them. And having diversified, you've expanded.
You mean what, in China?
Yeah.
Okay. We're doing very well in our investments in China.
Absolutely.
And when it's politically not appropriate, and we're told that, then we won't invest in China. But investing in China and investing in the United States and investing in other countries like India, there are parts of this world.
Yeah, you call India and a lot of what it's doing a recent sign of ascendance.
Let me give you.
So is India a new bet?
Let me give you 3 things to look for as to countries, generally, and companies and people. Are you earning more than you were spending, so that you have a good income statement and a good balance sheet? Okay? Those that are better financially will be better off, less vulnerability. Are the people within that country operating well with each other to be productive through a healthy capital markets creative kind of environment, that the system, they're working well with each other and they're not going to fight and hurt each other. And number three is they're not going to get into an international war or some war. So if I'm looking at some places to be biased toward, I'm looking at places that are more like that.
But not like this, not like the USA. We're not doing any of that. Any of it.
We have, as a country, those issues. Other countries have those issues, but some places...
We just personified it with the fight over Kevin McCarthy and his speaker. People are looking at this. We can't get our act together. We're ignoring the dead elephant in the room, and it's exploding on us now.
Of course, but we're jumping from one thing to another. I just wanted to complete on the thought of...
But we're limited for time in that respect. And you're brilliant at this. I just want people hearing what you're saying are going to interpret that. Everything he warns about or cites or focuses on is a big worry right here.
That's right. I have a principle. If you worry, you don't have to worry. And if you don't worry, you need to worry. Because if you worry, then you'll take care of the things that you're worrying about. If you don't worry, you won't. And so...
But we're not worrying.
So I hope that people will worry more, be more concerned about the debt, be more concerned about the international... It doesn't even come up as an issue among Americans' 10 biggest concerns.
And certainly not Congress's.
Okay, so maybe conversations like this, do the best we can. Yes, we have to worry that they're not worrying.
Right.
And we have to worry they're not dealing with it. You're asking, what do we do? Okay, we might communicate. And we do know that every one of these things, if we work together in a smart, bipartisan way, so that we can do the best balancing of those choices, that we can deal with most of these problems. But the problem is, I'm agreeing with you. The reality is there is populism of both extremes, meaning that both parties are lining up for a fight, that there's not trust in the system, not trust in truth, not trust in the system.
Well, does any politician?
And as a result of that, and as a result of that,
not happening.
And it's not happening.
No.
And as a result of
Getting intense.
We are likely to have irreconcilable differences that may not be settled by rules and law. Okay?
All right, so the direction we're on, you've talked about this in general, principles for dealing with, changing world order, principles for success, I mean, this has become such a phenomenon with all your bestsellers that's even interpreted tens of millions who hop on YouTube just to catch what you're saying. But what you're saying is we're none of that, really. We're not following any principles at this point. So I'm just wondering what the fallout from that could be. And is anyone on earth presently doing that? If we're in the final throes of something that could be very bad, we can avoid it. You say, if we address this, but we're not. Is there a politician, a candidate, someone who stands out to you that gives you hope?
I'll answer that. Just give me a second to get it out. We need bipartisan middle. The majority of Americans want a bipartisan middle. We're having extremes at both sides.
But the extremes are the ones who are deciding it.
That's right. I would say if the middle, moderate Republicans, moderate Democrats, just even said, I'm bipartisan. Can you say, I'm bipartisan. I want to work across...
You'd be drummed out. You'd be drummed out.
Okay, but then will you have the courage to do that? If a limited number, even a small number of both parties became bipartisan and put together a bipartisan coalition there for voting, okay, in the Senate and the House, that they would have swing votes and they would have a great
party. Would a third party do? Well, it's not happening in the major.
A third party is maybe something that's too great to aspire to, maybe, okay. But if you even just had members of either party say, I'm bipartisan, I want to work across party lines. I have more in common with the moderates of that party to work together than I have for those other extremes.
But Ronald Reagan did it with Tip O'Neill.
Yes,
to give decades of the shelf life to Social Security. It is possible.
And that
Are there people like that today?
We'll find out. I don't think it's likely.
Right.
But I think if it's a very simple thing. Are you bipartisan? Or are you not bipartisan?
Joe Biden bipartisan?
I'm not going to comment
Donald
on
Trump
whether,
bipartisan?
not the way I mean it. Okay. Not the way I mean it. So, but I'm saying, and then if you have those, and then you build a coalition of those, that could make a big difference, I would hope. Okay. I'm just trying to give a practical thing.
If we don't, Ray.
If we don't, we are likely to have irreconcilable differences about values and wealth and important things that will drive people to different states. They'll go to the blue states or the red states.
Right.
There will be a difficulty of the central government to order the populations to behave in that way they want. They will say, make me. There'll be a challenge between the states
That's a revolution.
and the federal.
That's a revolution.
It's a very risky situation. Yeah. Okay. But it's come down to that the things that people will fight for have become, I will not compromise. I'm going to win at all costs. And so the rules are in jeopardy.
That's where we are now.
That's where we are now. And it comes in committees. You know, you watch how these committees, they're very politically biased.
And look at the whole Kevin McCarthy drama. So, I mean, so this is not getting better.
I
guess I'm coming back to,
we are.
Is this your way of saying in very academic terms, historical terms, this doesn't look good for the United States?
It's my way of trying to convey facts.
Yeah. Well, the facts don't favor a good long-term end here.
Convey how the machine works, and convey choices that can be made at this time. I do agree with you. It's not considered a priority because we haven't felt the pain of it. We go about our lives.
Yeah.
You know, you go to your favorite sport, you watch the movies you want to watch, kids go to school, and life is at normal, and that's what our experience. And then boom,
something hits.
And then when these things hit, so the thing.
How close are we getting to the hit?
It's going to evolve over the next 5 years, okay?
5 years.
It's going to evolve over the next 5 years in the following way. We're going to have internally a great political conflict in terms of that polarity and so on.
As if we haven't already.
No, but now we've got the elections,
right?
Okay? Now we have just lining up for the fight. Okay, so.
But the fight will be more entrenched even after the election, no matter who wins.
Will we accept judgments and rulings?
Well,
what will that
certain
mean?
people didn't accept the last presidential election results. What makes you think that that would change?
I think all I'm saying is it's a question, right?
Right.
You asked me how it's going to evolve.
See, I think you've already figured out the answers. You're that smart. You know what's going to happen, and you're worried, but you're couching it by saying, here are some things that could change. But I don't think
anybody's accusing me of couching much. Like I'm saying, here it is. Over the next year, and so on, we are going to have a great political conflict. Over the next year, 2 and 3, we are going to have, in my opinion, I may be wrong, we are going to have debt and economic issues that will play into that. And over the next 1, 2, and 3 years, we're going to have conflicts with geopolitical conflicts with China and such.
You see how he laid that out there over the next 5 years? He's not.
All right. That was a little intense, wasn't it?
Yeah, man, that was pretty intense. Yeah, and I think if Neil Cavuto were a food, I think he'd be some kind of whole wheat toast, just bland with a little bit of a bitterness taste to it.
Not bad. A bit of a bran muffin, isn't he?
Yes, yes.
Rice cake, perhaps.
Ray Dalio was a calm and patient guy there too, man.
Yeah, I was trying to figure out why Neil was interrupting so often. Maybe it's his idea of like the news needs to go quick because everybody's got that TikTok attention span, or maybe he just thought that Ray was stalling. That was kind of the vibe I was getting. A lot of these experts will come in and they'll sound the alarm, the sky is falling, and someone will say, so what do we do? And they're like, nah, I don't know. But I just want to say the sky is falling. There's quite a few people that do that. So let's get into what we think that Ray is trying to say. A big part that he mentioned a lot was irreconcilable differences leading to populations moving to different states. What he's saying is he doesn't think that the Reds and the Blues, we're talking about Republicans and Democrats, not Bloods and Crips, not Serenos and Norteños, but really it might as well be the same thing. They can't get along, right? And who chose it? Those were the two colors that would always represent enemies. It's never like the greens and the yellows or the purples and the oranges or something. It's always reds and blues.
Probably goes back to the Montagues and the Capulets.
You would know that, nerd. Hatfields and McCoys.
Yeah.
Right. Well, Ray talks about in his Changing World Order book and really philosophy that this is a common thing that you see within countries, is that the two political parties cannot get along. And it's one of the things that leads to the ending of an empire. That's why I think he's saying this. And there could be a little bit of bias there, that he tends to look at the world from that perspective because he wrote that book. So he's reading into it. But maybe not. I mean, I don't know if any of us would disagree that the political parties aren't really getting along right now. I mean, we literally had just like Fox News as the person showing this interview, and there was already someone that didn't like that it was Fox News. So this is very common that people pick sides. His quote in the article that we got this video from says, "We are likely to have irreconcilable differences that may not be settled by rules and law. Irreconcilable differences about values and wealth and important things that will drive people to different states. They'll go to the blue states or the red states. There will be difficulty of the central government to order the populations to behave in the way that they want." We're going to talk about the relevancy of this, but before we even get there, I remember 5 years ago, people asked me, "David, where should I invest? You're the long distance real estate investing guy." And I said, look for three things. Simplify this. Just look for three things in the area that you're going to pick. 1, good weather. 2, low state income tax. And 3, where would a conservative that left California or New York move to? Okay. And if you did that, you made money. If you heard me 5 years ago say that, you probably went to Florida, Tennessee, and Texas. And I'm not saying this because of any political affiliation that I have. I'm saying the people that live in the expensive states that leave there are the ones that you want to invest in those markets. You don't want to be investing in the places where people without money go. It's people with money. Now, if you have money and you like the politics of California or New York, you don't leave. And then, by the way, I say California, New York, because those are the two expensive areas, most expensive states. Incomes are the highest. The only people that leave are the ones that don't like those politics. Okay. So if people were fleeing conservative states with money, I would have said the opposite advice. I would have said, buy somewhere that liberals are going to want to go, that are getting out of conservative states. Like if Texas starts to get rough and all the liberals say we don't want to be in Texas anymore, where would they move to? You want to go by there first. So I think that what he's describing is that you're going to see these irreconcilable differences where the couple can't get along. They're going to sleep in different rooms. What room would they go to? How do you get real estate there first? What state should you be buying in? Issues that are apparently crucial to Dalio, like lowering national debt and compromising with healthy capital markets, aren't considered a priority to politicians and everyday Americans because we haven't felt the pain of those things yet. Great point. I've been concerned about inflation for years. It feels like it's all I talk about, but I hardly get anybody interested in it. Nobody is clicking on TikTok videos about inflation. They don't care about it, right? It's not until gas is expensive and they're pissed off that everyone's interested in this, right? And then Richmond, north of Richmond comes out. What was that guy's name? Oliver or something?
Yeah, I don't remember. It was Oliver something. Yeah.
Oliver Anthony, maybe. 2 first names. Confusing.
Put it in the chat.
Yeah, he writes a song. Everybody's like, yeah, that sucks. Like, I'm mad too. Well, 45 years ago, not 45, 4 to 5 years ago, I was warning everybody about this and it just wasn't interesting. And Ray has a point. People don't care until they feel the pain. When they feel the pain, all of a sudden, this is a big deal. Okay. So pay attention to it early and take steps early so that you don't get caught off guard. Dalio also recommends diversification. The one thing that we know most is that we don't know that what we don't know is greater than anything that we do know. I thought that this was sort of the most relevant thing other than the state relocation in this article. He knows there's a problem, but he isn't sure on the solution, right? I felt like Neil was trying to pin him down and they were saying, hey, what do we do? And he's just like, no. Like, I'm just trying to tell you about how there's a big problem here. Okay. His solution, like the solution everyone gives when they don't know what to do, is diversify. You're never going to get a person that doesn't want to say diversify because it's such a easy to give answer. You'll never be held accountable for it. When you don't know what to do, you just say diversify. That's what I took out of this video, that Ray knows there are serious, serious problems looming on the horizon for America, but he doesn't know where to tell you to put your money. He doesn't know what to tell you to do with it. So he just says diversify. Anything there, Kyle, that you think I missed?
No, I loved it. I think you hit some good points. I really like what he said, right? If you're not worried, you should be worried, because I think that's a big part of it too. A lot of us can stick our head in the sand. We can sort of have this pie in the sky view of, hey, I'll always be bailed out. Everything's going to be fine. But yeah, if you're not worried, you probably should be worried, and vice versa, right? If you are worried, then it's okay. You probably don't need to be as worried, because you're probably the kind of person that's already planning for things like could be looming in the future. So yeah, great points, David.
Yep. He also makes it clear that financial pressure is likely to be high. So it's the same thing I've been saying. We're not hoping that this happens. We're not looking forward to it, but we think it would be foolish to not tell people that there is likely a recession coming. Go ahead, Kyle.
Which brings me to the next article here. We're going to be talking a little bit about gas prices could fall to $3.25 by Halloween as the oil prices have plummeted. I saw some people in the chat actually talking a little bit about how they've seen the oil prices, or the gas prices, have just been super, super high. I think like almost $6, $7, $8 in Southern California. But oil prices right now are actually in free fall mode. The dramatic reversal should bring a relief to drivers and nervous central bankers very, very soon. Basically, the national average for regular gas dipped to about $3.77 a gallon on Thursday, according to AAA. That's 11 cents below the 2023 peak that we saw last month. So it's headed in the right direction. I love this quote: "People at cocktail parties will finally be able to talk about gas prices in a good way." No doubt it's welcome news for the consumer portion of the economy. Such a drop in gas prices would make a significant break for people like us, consumers that are exhausted by the high cost of living and the soaring borrowing costs that we're seeing. David, what are your thoughts just on gas prices, oil prices in general, and how that can impact us and the economy?
Well, first off, gas is something that all of us are paying for, unless we're like Kyle and we were smart and we bought a Tesla. I once saw his Tesla and said, "Oh my gosh, your car has a computer." And he said, "No, my car is a computer."
That's right.
One of the Kyle mic drop moments that happen in life. He loves, loves that Tesla. But for everybody else, they're going to have to pay for it. And I'm not an expert on this, but my understanding is that many other energy related things are tied to oil. So it's not just the gasoline that goes in your car. It would be the cost of airline tickets and energy to heat or cool your home. Like, a lot of things are tied to this. So as oil becomes more expensive, it hurts everyone. And as the prices drop, we all feel a little bit better. So it's nice when you get a little bit of something working in your favor, because inflation has been really hard. We know that prices have dropped to $3.77 a gallon, and they're predicted to hit $3.50 by Halloween. Dude, I can't even remember in California when prices, I was like in college or something when they were that low. I filled up. I drove to Southern California to do the Meet Kevin interview, which Kyle, let's see if we can get Angela to link that in the notes so that people watching this can watch.
We will link that right below.
Meet Kevin, because we went into the economy quite a bit there. I think it was more expensive to drive there than to fly there, because I just did not expect gas to be that expensive. I'm unfortunately one of those people that doesn't look at the price. I just have to get gas, so I get it. But it was like a little more than half a tank was $80 in a Camry. It was not cheap, man. It was, and I had to, you got to get gas several times when you're driving from Northern California to Southern California. But this should provide a little bit of relief to consumers as we move into a point where gas is lower. And that's the relevancy of this article. The good news could influence the Fed to not raise rates again because gas prices are a little lower, which, God, I would love it if they wouldn't. As a side note, if you're someone who likes to play the market, like you buy during the winter months and you sell during the spring and summer months, right? As real estate agents, we advise our clients of this all the time. I've done this my whole career. People will come to me in December and say, "I want to sell my house." And I'll say, "Can you wait till April? Because it will be really good if you can," rather than just taking that listing right away. Areas like the Smoky Mountains, Blue Ridge, Georgia, really anywhere that people are going to drive to visit, The short-term rental market is highly sensitive to gas rates. Little quick tip here for you. You're not going to hear this on any other channel. So if you like this information, do me a favor, subscribe to the channel, and even more importantly, hit that notification bell so you get told on your phone when we're going live, because this is not something you're going to hear a lot of people talk about. If it's a place like Orlando, it doesn't really matter what gas prices are. People are going to visit there because they want to go to Disneyland. They've got this trip planned for the entire year. Nobody goes to Disney World. Sorry, I said Disneyland. I mean, Disney World. They don't go on a whim, okay? But oftentimes people will be sitting around in the South and they'll say, hey, what you got going on this weekend? I don't know what you got going on.
I like that.
Why don't we take ourselves a little trip where you want to go? Want to go up to the cabin? That sounds good. And they pull up Airbnb and they look up something in the Smoky Mountains, and it's going to be a 2-hour drive to a lot of people in the South. When gas is really expensive, you don't take that drive. I notice a lot when gas prices go up, that occupancy goes down on my short-term rentals in the markets that someone drives to. My South Florida stuff, man, that doesn't matter what gas is, because people are flying to Fort Lauderdale. They're flying to Miami. They're flying to those markets. Same for like Los Angeles or Northern California. But Blue Ridge, Georgia, right? People drive from Atlanta to get into Blue Ridge. So when gas prices are high, I got to pay attention to that. I'm probably not going to get as many bookings. So you either need to drop the price of your booking, or you have to do something for the person visiting to make it worth their while, right? Like I've been thinking about when gas prices go up, offering like a free, like a gift certificate to a restaurant. Like, hey, even putting in the listing, gas prices are high, $100 gift certificate if you want to visit this house, or something like that, so that when people are considering visiting but they're not sold, it'll push them over the edge.
Yeah, two things I want to say about that. Number one, side note, Disney. If you're like a Southern California, Northern California person, Arizona, they actually, I just read today, they were going to be reducing their prices for children between like ages 3 and 8 or something like that to $50, which is pretty good. It's usually like $150 to get in. And another Disney thing, this is what I always say. I know that if I'm looking at my Facebook feed and I'm seeing my friends going to either Maui or Disney, that means the economy is doing well. Typically, if they're not traveling to those areas, that's my I guess my idea or my signal that that the economy is not going well. So just a little segue there. But next thing we're going to jump into here,
because I've got properties in Maui, and I will say that when the economy is doing well, I really like it, and when the economy is not doing well, it sucks.
Yep.
BALLS. It's yeah. There's not much you can do when people feel like they're not wealthy. No one's flying to Hawaii. That's a great point.
Very true. So speaking of flying places, down on the southern border, Biden is actually building a wall down there, which is interesting because he's so super opposed, or has been opposed to building a wall. So we're going to dive into that and talk a little bit about what that means. So Biden says the border walls don't work, yet he's down there in South Texas building them. President Biden said on Thursday that he doesn't believe that border walls work, even though, as his administration said, it will waive 26 laws to build them. He is down there building them right now. Construction of a wall that basically has been appropriated. He's gotten some funds earmarked specifically for it. And this was done back in 2019. So basically, Congress took all this money in 2019, said this is supposed to be used for building a wall down in Texas. Biden says, I don't think we should. And he basically says he tried to get Congress to reappropriate that money, to direct that money somewhere else. They didn't, they wouldn't. And in the meantime, there's nothing under the law other than that they have to use the money for what it was appropriated as, and he can't stop that. So he's actually asked Congress multiple times to take that money back because he does not believe in building the wall, but Congress has not done so. So now they are compelled by law to be building down there. David, can you share a little bit about what this impact might have on the economy, politics, and really just, you know, your everyday Joe that's trying to save up their money and invest?
Well, first off, this is just funny. that Biden's having to build this wall that everybody's so mad about because
Yeah.
Congress raised the money. And it was like, well, we have to spend it on the wall because people already, like, it was voted in that this would happen. And so they always try to sneak this stuff in there. Like, that's embarrassing. Nobody wants to ever admit that, like, this had to happen. So I thought that's funny. But as far as relevancy, when I heard this, I thought this is probably going to strengthen the markets in South Texas and the
Yep.
southern states. You're going to have money that floods into that area. People are going to have to be paid to build this wall, right? So if you look at money like energy, or I often like to use the analogy of like water, you've got all this water that's built up. It's all going to be flowing and flooding into that area to build this wall. So that means you're going to have workers that are going out there. They're going to get paid. They're going to need a place to stay. They're going to need food to eat. They're going to need shelter. They're going to want to go do things for fun. So they're going to be going out to the bars and drinking, or going to the movie theaters, or going shopping. So if you're in that area, or if you own short-term rentals in that area, or medium-term rentals, now is a time to consider really ramping up your marketing and trying to put a long-term tenant in there, or maybe even putting the prices a little bit higher, because demand should be going up in these areas as workers start to move down that way.
I love it. Yeah. Very interesting. Very interesting to watch and see how this develops over time. All right. So next one we're actually going to jump into while we're at it is we're going to talk a little bit about the surprisingly strong hiring sends that we have seen, which has made the bond yields go higher. So for those of you that don't know, U.S. employers, recently the jobs report came out and it came back strong. It shattered investors' expectations, showing that there is some accelerating economic momentum, stoking a bond market sell-off that is sending long-term borrowing rates to new 16-year highs. So basically, in September, employers across the United States, right, business owners, added 336,000 jobs to the job market, the strongest gain since January, and up sharply from what we had seen the month before in 227,000. But what happened was that job growth was so strong, bond and stock prices fell pretty sharply after the jobs reports release, reflecting how economic strength reduces the likelihood that the economy is close to a recession that would trigger Fed rate cuts. Both markets, though, later did recover. So just driving into a little bit of the details here, basically the Fed's job is getting a little bit more complicated here. For the Fed, the report keeps the door open to another rate increase hike earlier or later this year, but won't settle easily on that debate. So long story short, what's happening is we got good economic indicators. We saw a positive spike in growth in jobs that were out in the economy. The Fed's looking at that and they're going to see, hey, we think things are actually going pretty good. So let's go ahead and increase the rates again, potentially, which kind of scared everybody, because you would think it's oxymoronic. You would think, hey, the job market is doing well. That's a good thing. But people are afraid, again, of the Fed continuing to try to increase the rates. I think one of the key things here is to remember the Fed raises rates to influence borrowing costs, which slows economic activity to combat inflation. The surge in Treasury yields means that market participants are effectively doing the work of the central bank in the cooling economy. So, David, what are your thoughts on that, just in general, about the Fed and how they respond to potential improvement that we see in the economy?
Well, the Fed makes these decisions like, oh, we have jobs. That means the economy's doing good. We have to cool it off. We don't want it to do too good, so let's raise the rates. They make these decisions off of data like job growth. Same thing, the CPI would be included in that. The CPI is data that they use, and they say, okay, inflation is up, so let's raise rates. Inflation is down, so let's lower rates, right? I always question how accurate this data is. I don't trust the CPI. It's easily manipulated. And I wonder the same thing about these jobs. When we read these articles, you hear about 336,000 jobs being added, which is the most since January. And I just wonder where. What does this count as? Does Uber driving count as a job. If like someone loses their full-time job and they take 2 part-time jobs, did that just create a job out of thin air, even though less wealth is being made and less taxes are being collected? That's the first thing, is I just never really know how accurate this is, because I don't see anybody creating jobs. I mean, we've hired a couple people, but we've had a lot more people that lost their jobs and came to us looking for work than we've actually hired, right? And that's anecdotal. Like, my world isn't the whole world, and I recognize that. But I wonder if they're not making up the data that jobs were created so that they can then justify raising the rates, which is again going to make the economy worse. That's what goes through my mind. It would be nice if we had an expert who understood how this goes that we could bring on the show and talk about that a little more, because I don't know about you, Kyle, but I'm not seeing a whole lot of jobs being created right now. I'm seeing more jobs being lost. But I understand you have something to read from what the president of the National Association of Realtors on this very topic.
Yeah, a couple things I want to do really quick before I get to that. I want to highlight this comment here. Landon said, "Thanks for doing need analysis insights like this. It's a fantastic way to stay up to date on the current news and market moves for investors that may not have time to watch the news 24/7 like himself. Do us a favor, hit that like button, hit that subscribe button. Super important if you want to get up-to-date information on what's happening in the economy and how you can react to it and be proactive as well. And then last thing I saw Michael and Haiti said here, most jobs created were in the fast food, which is really interesting. For those of you that don't know, this isn't one of our topics tonight, but in California, they recently passed some sort of bill or measure that's going to make fast food workers minimum wage, drum roll, $20 an hour. Did you hear about that, David?
Oh God, I heard Scott Galloway talking about it, Prof G, that we should triple the minimum wage. So he's saying, Lawrence Yun is saying we should make minimum wage $20 an hour.
Not Lawrence Yun. This is happening in California.
Oh, it is going to be $20 an hour.
Yeah. For fast food workers.
We should get an article. Let's see if we can pull something up while we're going through this thing. I'll work on it the next time that you take the mic to talk about that. That always sounds good, but it's just going to make fast food more expensive, which actually might be a positive thing because people are going to be less likely to eat it, right? But overall, this never actually makes things more affordable. What it does is it incentivizes people to stay on the bottom rung of the ladder. When you get a job in fast food, there's nothing wrong with that. It shouldn't be the job that you keep. You should keep going, right? Like if you and me went to the gym and you had never lifted a weight and we just did the bar, there's nothing wrong with that. If that's what you lift, that's what you lift. I had a friend one time that said, "Hey, you're working out your body, not mine." I thought that was a really good quote. You shouldn't compare yourself to other people. But if you're still lifting the bar after 6 months, there's a problem. You should be lifting the bar plus some weight. You get a job at Taco Bell, McDonald's, there's no shame in that. You shouldn't still have that job 6 months later, 12 months later, 2 years later, 10 years later. It should have improved. Well, when you keep increasing the minimum wage, what you're basically trying to do is you're saying, this needs to be a livable wage. This needs to be a place that someone could stay at forever. That I don't like, because what it does is make everything else more expensive and it makes things less affordable. So, I mean, it always sounds good and it ends up not being wise. But why don't you go ahead and read this?
Yeah, I mean, this is it right here, right? On at the end of September, Gavin Newsom signed Assembly Bill 1228 into law. This is the law in California, repealing the Fast Food Accountability and Standards Recovery Act and replacing it with $20 per hour minimum wage for fast food workers, among other provisions. And I think he said something along the lines, I can't remember specifically what he said, but something like, we want to empower the fast food workers that are out there. And Jimmy exactly put it. That's exactly the point I was going to make, right? If I'm a business owner and I'm being forced to pay a certain amount to lower income jobs like that, I'm going to look for cheaper ways, more efficient, but also less drama, less issues, less hiring, firing issues. And I'm going to try to make robots. I think if you go into a lot of McDonald's and things like that, most of them have the kiosks. You rarely see anybody these days.
But they're not enforcing it yet, and they will, right? Like,
yeah.
I mean, we weren't going to talk about this, but I promise you, I would stake my life on this. You will see companies that come in and they create technology like a fry machine. They can make fries without a person. Like the whole architecture of the system is like, all right, here's the oil and here's the basket. You put the fries in the basket, you drop it in the oil, you take it out, you have fries. The whole thing is designed around a human being. Well, they don't have to do that. They could just create a lever that drops the basket down and at the right time brings it back up, moves it over, turns it upside down. Fries go into a thing. That little basket that all the fries go into, it could like automatically scoop them up and put them into wherever, like, and then it just waits for someone to come and grab it. And one person can do the job of 5. And so what you think was, oh, everyone's going to get paid $20 an hour. What happens is you end up getting one person doing the job of 5, and they end up paying the equivalent of $4 an hour when they were paying $12 or $13 an hour. And there's less jobs total, which means that more people go on unemployment. So then what happens?
Yep.
You have a Newsom and company come out and say, oh, there's no jobs for anybody to get. We have to do something about this. People need a living wage. So we're going to put you on unemployment and you're going to make just the same as somebody who's working. And then what happens is nobody wants to work anymore, because why would they? And that is literally what creates socialism.
Yeah, and you got me on a little rabbit trail here, but speaking of robots, Chipotle is looking to implement right now a robot that's going to be able to do all of these things, right? Look at it. It's putting all the corn on there, dropping it in there. That's going to replace a person's job, right? Makes this one right here, makes salads and bowls, and it's going to make the chips and all that kind of stuff. So even Chipotle is starting to implement this same stuff, and they're using it right now.
Stupid, man. You make me look smart when you say that, because it's like I could read the future. Of course, if I was really smart, I'd have been like Chipotle and I would have making this stuff myself. But
Yeah.
like you never outsmart. It's like every time you try to force someone's hand or take control and like, I'm going to make a company pay someone $20 an hour rather than tell the person to become worth $20 an hour. This is what happens. They go, okay, like these companies are not just going to get punked and be like, oh, okay, you're going to do this and we're going to have to charge $25 for a burrito now, because none of us are going to go pay $25 for a burrito. We'll just go buy our own stuff at the store, right?
Yep.
So instead, they make a robot do it.
Yeah, absolutely. All right, back to the jobs really quick. I wanted to share a little bit about what Chief Economist Lawrence Young for the National Association of Realtors has said specifically about the increase in jobs and what that means for real estate, because these are some important points. So this is worth reading his entire quote. It's a little bit long, but hang in there with me. So he said the job market continues to crank out jobs in high figures, 336,000 last month, and over 4 million more compared to pre-COVID March 2020. Seems pretty good, right? It does not mean all is well. The jobs data, however, is considered a lagging indicator, as the firms will only make a job cut decision after having cut costs in other areas. Commercial real estate in particular is flashing warning signs. Net leasing on retail and warehouse spaces is slowing. The office sector is continuing to bleed with rising vacancy rates, right? We're seeing it in big cities like San Francisco. Community banks, many with exposures to commercial real estate, are watching their balance sheets very carefully. Fast rising interest rates are breaking several sectors of the economy. The remaining sectors will also likely crack if the rate hikes continue. Given that the inflation rate is already cooling, the Fed needs to stop raising rates and strongly consider cutting interest rates next year. That would be the soft landing without the net job cuts to the economy. David, your reactions to this?
I don't know that I love it. I think he is the president of the National Association of Realtors, and the realtors expect him to come out and tell people it's okay. Like I said before, I don't know that the job data is super accurate, and his commercial real estate in particular is flashing warning signs. I mean, that part is true. I'd say it's more than flashing warning signs. You're starting to see planes falling out of the sky.
Yeah.
In that world, it's getting really bad, and it's going to continue to get bad as rates keep going up. I like his point about the fast rising interest rates are breaking several sectors in the economy. It's not that they raise rates. That's not bad. It's how fast they raised them.
Yeah.
If they were smart, they would have said like, okay, over 5 years, we're going to raise rates 6 to 7 points or something. You can absorb the change when it comes at a level that makes sense. So like, for instance, commercial real estate, if everyone was at a 3% rate and they were like, all right, we're going to build it up over the next 9 months to 4, and over the next 10 months, then we're going to build it to 5, and people knew what was going to happen, you work that into your underwriting of the property and you prepare for where you need to be to get there. When you just go 3 to 8, there's no way that you can recover from that. You're just going to lose the property. And I've said this before. This is happening to operators that did a good job. They bought it, they improved the NOI, they made the property worth more, they increased the cash flow, and then because the balloon payment is due and rates are 3 times or double what they were when they bought it, even though it cash flows, they lose it. That it's like insane that we did this, and that our Fed, like Jerome Powell and company, either doesn't care about the ripple effect that that's going to cause, or they're too foolish to recognize what is happening, right? Like, if you had a person that was high, like we've been on stimulus, and you were a doctor and you're like, okay, we need to bring them down, you wouldn't just shoot them up with like an insane amount of heroin. You would like slowly get them on methadone and get them used to this.
Yeah.
And you would increase the doses by little bit so that the body can absorb it. And we haven't done that, which is why it's kind of like the turbulence going on in the economy is wild. It's really heavy.
Speaking of methadone, did you know, this is back in the days when I used to work in the hospital, that if like an alcoholic was admitted, right, and you can't just like stop drinking alcohol right away, they would actually prescribe beer to the patient, and they get to have it while they're in the hospital. So I'd like, you usually see all these medications, but I remember going through a patient's chart and I was like, oh, beer? He's been
15 cc's of Bud Light.
Yeah, exactly. Like he's just downing it in his room, and then probably his next door neighbor is like, why don't I get any? So,
yeah, I know. What do I got to say to get some of that? Right.
little known
We
fact.
had that in the jail. People would come
They
into
would
the
do that
jail,
too?
and if they were kicking a drug, like usually it was some kind of opiate, like heroin or some OxyContin or oxycodone, they would prescribe a certain amount of methadone to like get their body from needing it to not completely get hammered. So even in that area, we're smart enough to recognize that's what people need. But when it comes to the economy, we're just like a little 5-year-old just grabbing dials and cranking on them. Like, let's see what this does.
So the people of the economy just need a little bit of methadone and beer to get by.
It would have been a whole lot better than what we're doing right now. But that's why we're on YouTube, sounding the alarm.
That's right. So speaking of alarms, this is kind of alarming. I don't know if you guys have heard this, but no one is going into accounting. If you follow this channel, you've probably heard David say many, many times, we are in need of good bookkeepers, good accountants out there. They're hard to find. Small businesses, real estate investors look for solid people, but they're just not out there. Well, actually, we're going to talk a little bit about that. An accounting career, once a launchpad into the upper middle class for hundreds of thousands of America, it's no longer paying off. Salaries have risen for young people in finance, marketing, logistics, and consulting in recent years. Even teachers are seeing a slight uptick. But at the same time, the median inflation-adjusted pay for young accountants has stagnated. There's this big pay disparity, and that's a big reason why fewer people are actually choosing accounting careers, and it's threatening to worsen an already dire shortage of accountants out there. They're seeing a lot less undergraduate majors, literally declining by double-digit percentages in recent years. And what this is leading to is an even greater workload for the existing accountants. So they're getting burnt out because they're being overworked and underpaid. And this is crazy. This like made me jump out. Basically, more than 300,000 accountants have left the profession between 2019 and 2022. It's not because there's no pay. It's not because there's no opportunity necessarily. It's just because the pay isn't increasing. And then you can come down here and see like accountants right here are making about 56,000 that for inflation adjusted, they're actually down 1%, while all these other sort of sub-segments of the industry, financial analysts, marketing specialists, even teachers are all increasing, but accountants are just stuck. For decades, Ernst & Young, KPMG, other accounting firms recruited thousands of graduates annually with the promise of solid pay and job security. And for a long time, the profession was a surefire way for people that had zero money to come out the other side of college and have a successful career. But we're just not seeing it anymore. And then they go in and talk a little bit about some people and what their experiences have been. David, what are your reactions to this job, I guess, exodus that you're seeing? A lot of accountants out there, and now we're in a dire shortage.
Yeah, I think there's some really good lessons that we can pull out of this situation, as well as a practical application for wealth building. First off, you mentioned the point that accounting is not paying as well as finance, marketing, sales, consulting, logistics. In general, these positions have been paying a lot more. And also, accounting requires a fifth year of education because you need an extra license to be a CPA. So if you got to work harder to get another license and take longer before you get paid, and then you're going to get paid less, who's going to do it? Okay. So at first glance, it's like, that's stupid. Don't be a CPA. But there's some opportunity here because when everybody is zigging, that's when you want to zag. My take on why you haven't needed accountants, bookkeepers as much is because there was so much money to be made in a hot market. 10 years of stimulus, crazy money, the biggest run that we've ever seen. You don't really need to spend as much time counting where the money's going or making sure that you're not losing it when you could be out there getting more of it, right? So companies were hiring salespeople, logistical people. Hey, we got a ton of revenue coming in. Let's get more. If we make accounting errors and we don't see where the money's going, who cares, right? We can make 100 grand or we can make 96 grand, but that makes more sense to go make the money than to just not make it and make 20 grand. Okay. So the defensive minded positions like accountants, like bookkeepers, those type of roles, they were not as important. Nobody was really looking at where the money was going because so much of it was coming in, which led to overworked people leaving the profession, like Tammy here, who says she's in finance and accounting and she definitely feels overworked and underpaid. Probably is. Now, 300,000 accountants have left the profession in the last 3 years. That's quite a bit.
It's crazy.
Right? Because they can make more as a financial analyst. Well, are you going to make more as a financial analyst when there's nothing to analyze or less to analyze because there's less business opportunity? Right? Something to think about. Now, here's a take on something that people that are not in business probably don't think about, but they would be wise to understand. There are two components to every business. And I talk about this in the book Scale. And I talk about it to any of the people that are coming to the retreats that we host or whenever we're giving people business consulting or investing consulting. You got to understand fish catching and fish cleaning. Okay. Fish catching is sales, creating revenue, and fish cleaning is operations. All right. Fish catching involves more skills are typically required. That does not mean that someone doesn't need skills to clean a fish. It's more that the skills of catching a fish are harder to develop. Like, think about when you're actually going out there and you're fishing. You got to pick the right lure. You got to know where the fish are. You got to find them. You got to know how to present the lure. You got to avoid the snags. You got to set the hook. You get the fish on the line. You got to keep the line from breaking. There's a lot more that goes into it. There are skills that are required to clean a fish that someone's caught. I get it. But in
Probably
general,
more risk too, right?
Way more risk. That's a great point. When you're fish catching, you go out there, you spend all the money on the boat and the gas and the time and the reel and the rod and all of your stuff, and then you don't catch a fish. Versus the fish cleaner that gets paid, they just wait for someone to bring them a fish to clean. Okay. And I bring this up because almost all of us, I talk about this a lot in Pillars as well. Almost all of us that ever got a job started in operations and some kind of fish cleaning. It's the first thing you delegate. If you're great at catching fish and your business takes off, you don't go pay someone and teach them how to catch fish. You're already doing that. You're like, I got all this fish in the live well. I need someone to clean them before they stink. I need someone to get them to the market. I'm going to go out there and catch more fish. You follow me so far, Kyle?
Yep.
Okay. We get used to cleaning fish and we call that work. This is the problem. We start to think that my job is to clean fish and I should be wealthy by cleaning more fish. Now, there are a handful of people that are so skilled at operations and cleaning fish that they actually can become wealthy. It's very small because it's easier to find a person to clean a fish than catch a fish, which means it's a less valuable skill. In general, not as a, there's always an exception. Okay. But in general, sales will always pay you more than operations because catching fish is inherently more valuable than cleaning fish. You with me so far?
Yep. Following that.
Okay. Bookkeeping and accounting is a form of fish cleaning. It is saying someone else already did really good. They went and caught a bunch of fish. They made a bunch of money. They did a bunch of sales. They made a bunch of good decisions. They built a bunch of skills. Now, I just want to sit here and kind of write out the coattails of what they did. That's what a bookkeeper is doing. My advice to the people that are in bookkeeping is you are going to be needed in the coming months because companies are going to start turning their attention away from sales because the fish aren't biting. right? Making money in an economy with a lot of stimulus is like fishing in a stocked pond. I know you're going to like that one, Kyle, because you take your son Isaac fishing all the time. Isaac, if you're listening to this, what's up, my buddy? That is the thing. It's much easier to catch fish when the pond is stocked. Okay. Well, now the fish have been taken out. We're not printing money like we were. It's way harder. Also, you got a ton of boats out there all trying to catch fish. Everybody's fighting over the same clients, and they're harder and harder to find because the fish aren't biting. It doesn't make as much sense anymore. So you're going to see the people paying a lot more attention to the fish they've already caught, making sure that their fish cleaners aren't missing part, right? If they were getting lazy and they were leaving some meat on the bone, they're going to go and say, what the heck was this? You better do a better job. Now, here's my advice. We're going to need bookkeepers and accountants because we're going to be paying a lot more attention to profit and loss statements in the coming future. That's what happens when things get tight. When the family finances get tight, you start looking a little bit closer at the budget and asking where you can make cuts, okay?
Yep.
If you want to win in this environment, learn how to clean fish and help with the catching of the fish. Stop with this garbage of that's not my job. If you're a bookkeeper, listen to me carefully. If you're an accountant, listen to me carefully. If you're any form of operational logistical person, keep doing your job. You don't get to stop. We can't have stinky fish that didn't get cleaned. Get good at doing it so you get it done in 6 hours of the day instead of 8. And with your final 2 hours, make them productive. Hey, boss, can I come on the boat with you and bait your hook? Hey, boss, can I come on the boat with you? And when you get a fish on the line, give it to me. I'll reel it in and you can grab another hook and you could throw it out there and catch your next fish. Hey, if I'm doing a good job with that, will you show me how to catch fish? I may not be as good as you, but I might catch 20% as much fish as you. And if I could catch the company 20% as much fish, I've covered my own salary. I'm working for you for free. Who's going to let that person go, Kyle? Are they going to be the one that gets laid off?
No
They
way.
might even get a raise.
Yeah.
They might say, dude, you're covering your own salary here. I can give you a bonus and it's still less money than if I just paid you. This is what I talk about all the time. How you win in capitalism. This is in the book, Pillars of Wealth, which is actually right here. This book cover will look a little bit different. This is the pre-order one, but you can get this at biggerpockets.com/pillars. There is a way to get good at catching fish and there's a way to get good at capitalism. You got to get yourself out of the poison that says my job is to fill in the blank. I sit here and I clean the fish. I sit here and I sharpen the knives. I sit here and I load up the boat with gas. That's all that I'm doing. Okay. No, your job is to help the company win. Your job is to help the team win. Your primary role, your Dennis Rodman, is to rebound and play defense. But if you get an open layup, are you just not going to take it because you're like, that's not my job? That's a selfish person. There's some kind of revenue generating activities that every accountant and bookkeeper and fish cleaner can do. And that's what I wanted to talk about this. These people are leaving the profession and they don't have to. You can stay with the skill that you've built, that you're comfortable with, that you're good at. You're bringing value to your company and add to your freaking skills, okay? And you don't even have to get out there in the front lines and do hard sales. What if you just follow up with all the clients that, like the fish we almost caught, Kyle? They wanted to sell their house. We had the listing agreement signed. It was going to go on the market and they changed their mind, right? My buddy Justin has almost moved out of Brentwood like 3 times. I know you've been talking to him. He's moving to Sacramento. It hasn't been the right time. So we don't pressure him. Justin, if you're listening to this, what's up, man? But at the same time, how many fish have you almost caught but didn't quite get there? What stops a bookkeeper from going through that list and calling those people and like, holy cow, this fish was waiting to jump in the boat. I just had to put the net out.
Right.
And then you could go back to your boss and show that you actually help the team. If you show that you're willing to generate revenue, to create revenue for the company, which is the hard thing to do in a recession, not only do you keep your job, but you learn new skills and you get the ability to make more money.
Well, so let's take that sort of a different direction because that's super important and huge. But what about somebody who maybe is a CPA? They're working their tail off, but we're seeing this mass exodus. We're seeing this shortage. To me, that also sounds like there's an opportunity for some people out there, right?
Yes, that's a
maybe
great point.
Keep their W-2, but there's a lot of people that need good CPAs. Maybe they move into consulting or maybe they take on more clients for themselves. What are your thoughts on using this as an opportunity to really bolster your income? So number one, you can have bigger savings in case we do see some sort of recession and you need that money, or just an opportunity to invest that money into assets. What are your thoughts on that?
That's exactly how people should be thinking. That's exactly what you should be doing. There's less accountants, which means that the ones that we have are more important. Companies haven't valued you because they've been valuing offense over defense. As you head into a recession, that's going to change. You're going to see
Yeah.
more and more people that are going to become defensive minded. The CPAs that you need to hire are going to be the defensive minded ones that also have offensive skills. Right? Like that's something that every leader looks for is efficiency. If you're a baseball team, you need a second baseman that's going to be a good defender. Typically, second basemen don't hit for power. So if you're a second baseman that also can hit 20 home runs that year, you can get a higher deal, a better contract than one that doesn't do that. Right? And wouldn't that be smart to be like, yeah, it's not my job to do it, but it's just a bonus if I do it. I'm going to stand out from all the other ones. That's the advice that we're giving everybody. If you're listening to this right now, if you're one of the bookkeepers, you're probably going to be in demand pretty soon here. Don't just get comfortable and say, well, my job is just to report the finances.
Yeah.
Well, the company could run out of money and you got nothing to report, right? Figure out what you can do, especially in a small business, to get in there and create more revenue. And my advice is to start with lead follow-up. You don't have to do lead generation because maybe that's scary to you, but you could definitely do lead follow-up, or you could just assist the damn salespeople. Go to the person really busy trying to catch fish and they're snagged and they can't get their hook out. And hey, can I get that out? Here, you go grab this one, catch a fish. Let me free up your snag for you. There's lots of things that can be done in the company to support the salespeople to keep revenue coming in so you can keep your job as the CPA.
I was having coffee today with some of our Spartan League members, actually, and they both started a side hustle. They have their W-2s. They basically consult with people on architecture for ADUs, right? And that side hustle has grown into a pretty sizable business in the last 10, 11, 12 months. And I asked him, what caused that, right? What separated you? Are there other architects out there? Oh, yeah, there's a ton of them. Well, why are you getting all this business? And it's just kind of word of mouth. It's been organic. They haven't really put any money into it. It's just taken off. And they said, well, two things: communication and responsiveness. Right? We are there when the client needs us. We answer our call, we call them back, we do what we're going to say, and we communicate with them in a way that they can understand. And I think there's so much opportunity right now across many professions, right? Contractors, handymen, architects, CPAs, bookkeepers, where if you bring those two things, just be responsive to your client and communicate to them in a way that makes sense to them and they understand. There you could go start just about 5 or 6 businesses and be super successful in where a lot of people are having a hard time. So it's just standing out, doing something different. And it's not even that hard. It's just being the best person and the best communicator and actually responding, right? Calling people back or emailing people back when they email you.
Yeah, we talked about that in our leadership meeting, that what everybody in our company needs to be thinking of right now is where is the demand in the market and how do I want to meet it? Which is a very different question than who is bringing me my fish to clean and how do I avoid doing anything more than cleaning a fish. And I think if we're honest with ourselves, many of us go to work every day thinking that way. I just got to clean these fish and I got to get my boss off my back.
Yeah.
The pillar system is very different. It's clean your fish as fast as you can so you can learn a better skill. When you earn the right to go do something more valuable, you will also earn a raise. And then from that position, how do you get really good at that? The question is, what is the demand in the market and how do I meet it? We talked with our real estate agents and I just gave them a hypothetical example. These were the top producers. These were the 3 people that sold the most houses last month. And I said, what stops you from going and learning another market where there's a lot of opportunity and figuring out what the short-term rental analysis would look like, what contractors are out there, what BRRRR opportunities are possible, where there's hidden opportunities, which markets would be the best for someone to buy in that wants the highest cash on cash return they could get. And they all said, well, I don't live there. I don't know that market. And I said, I know, but how did you learn the market you're in now? Well, I live here. Yeah. So you didn't do anything intentional. You just woke up and you drove around. You wanted a burrito, so you went to Chipotle and you learned the market from just being there. That was by accident. What would it look like if you intentionally went out there and said, I'm going to learn skills in this area? What stops you from doing that? In the podcast I did with Ryan Pineda, we talked about how the beautiful thing about life and creating wealth and building your skills and even business in a lot of cases is there's no defender. There's no one out there stopping you. There's no one smacking the tablet out of your hand when you're not looking, or
Yeah.
unplugging your computer when you're in the middle of the Excel program. There's nobody changing
That's
the
true.
passwords on your email trying to sabotage you. It's just you, man. It's like
Unless you have
our
kids.
own. Unless you have kids, yeah, or a cat. I've heard that
Yeah,
cats,
that
there's
might
like
happen.
keeps going
Yeah.
around of cat sabotaging, right? But like absent cats or kids, there's nothing that stops us but our own sloth and selfishness and entitlement and fears or whatever the case is. But it all lives between our ears. There is no defender. So if you want to go out there and figure out how to bring wealth to the market or value to the market, there's nothing that's stopping you. And these people that you're describing did that. They said, hey, there's a need for this. Let's go learn how to do it. Let's build the skills we need, which were then for architectural resources and contractor connections, a little bit of analysis with like, just here, if you spend this much money, here's what you'd get. Now we can call ourselves a consultant. Now we just market it. We tell people this is what we do. People come to us. They pay us this much money. And if someone says, well, you don't deserve that much money, it doesn't matter what you deserve based on the time you put in. It matters how much value you brought. And if you're doing something that will help somebody create $2,000 a month of cash flow, they may be willing to pay you $20,000 to show them how to do it. And it's still a good investment. They said, where is the need? Not what is the easiest thing I could do. And that's what we've been talking about with our leadership team, with the agents on our team coming into this bad economy. This is now the time to break yourself out of, I'm just a fish catcher. Or sorry, I'm just a fish cleaner. I don't want to do the hard work. I don't like sales. I don't like people. Me. You have to be asking, well, who has the money and what do they need if you want to get some of it for yourself?
And how can I serve them? Speaking of, if you do all of those things, there's a potentially a chance that you could buy a $42 million house, right, David?
$42 million house. That's exactly right. Before we get to that, I was just reading R's comment here. The jobs report was beaten by almost 3 times his expectations. That doesn't feel like a recession is coming. R, I sincerely hope that you are right. My gut instinct would lead me to believe that jobs report was doctored. Don't know. Not sitting here making conspiracy theories, but if we're raising the minimum wage to $20, I don't think we have a super healthy economy. And I think you're going to see more and more stuff like that coming out. But for those that do bring value to the market, like you just said, Kyle, do you have a picture to pull up here?
Yeah, I got a few pictures for you.
Dave Portnoy, the founder and I believe CEO of Barstool Sports, has recently set a record buying a $42 million home, which when I heard of $42 million, I expected this thing to be like 50,000 square feet or something. It is considered a mansion, but I feel like I own properties bigger than this mansion. It is 6 bedrooms and 9 bathrooms, and with 2.5 baths. That doesn't sound like a mansion. That just sounds like a really big house, but I don't know. That's how it's being called. $42 million is what he paid for this Oceanside property. Obviously very good looking, as you can see from the video here. Portnoy is known for Barstool Sports, the company he started about 20 years ago. In August, he paid $1 to buy it back from who he had previously sold it to, which was Penn Entertainment. So he sold this for $500 million to Penn Entertainment. And I don't remember the details, but it was something where they were no longer allowed to own it because they had ownership stakes in something like a gambling company. So they couldn't, basically, like, regulations prohibited them from owning Barstool Sports because, again, if it's not gambling, somebody here in the comments might know. But it was something where if they owned Barstool, they could influence other markets, which they had ownership stake in. So they were forced to sell it to keep the bigger company, and they sold it back to him for $1.
Yeah.
And then the deal was if he ever sold it again, they would get half of whatever he sold it for. So he sold his company for $500 million, bought it back for $1, and now he bought the most expensive house in Nantucket. This dude's got like a Cinderella story if I've ever heard one. And I don't know what advice I could give people for how they could put themselves in a position like that. But I do know if you're working hard and you put yourself in the right positions, you tend to get lucky, right, Kyle? Like the people that get a lot of steals happen to be in the right passing lane. The people that recover a lot of fumbles happen to be around the play. They didn't give up on it. The people that happen to get a lot of deals and sales happen to be out there networking and marketing and meeting people and having a great attitude. What do you think?
Yeah, I agree. I mean, I'm going to keep it light here, but there's actually an old poem about Nantucket. There once was a man from Nantucket who kept all his cash in a bucket, but his daughter named Nan ran away with a man, and as for the bucket, Nan took it.
I think we close with that. That's beautiful.
I've actually never had a desire to go to Nantucket. I'd imagine it's kind of like the Lake Tahoe of the East Coast or something like that.
Yeah, but you get a lot more in Lake Tahoe for 42 million than that. I mean, you could buy like a block in Lake Tahoe.
You could
for
get like a
42 million.
Zuckerberg mansion for that much, for sure.
That's right. Speaking of mansions or cabins, if anybody here would like to visit any of the properties that we are currently managing in the Smoky Mountains, we're going to be going live with the company at some point, but we do have some assets under management. Send me a DM or reach out to Kyle. He'll put you in touch with me there. We can get you a discount on visiting some of those beautiful properties in the Smokies. And if you haven't already done so, please head over to davidgreen24.com/join. We're just going to get your email, and then there's a bunch of boxes that you could check to let us know what you're interested in, so we know what type of content to give you in the future. We're going to have some educational courses. We're going to have accelerator courses, which are going to be things on specific topics. They're 6-week courses that include homework, accountability, and a private group. Kyle will be teaching one on performance improvement hacks and goal setting. So head over there and sign up. We're not going to sell your information to anyone else. It stays in my own database, but I'll be able to communicate with you better. You can sign up for our text letter there, Behind the Shine, and kind of like see what's going on with interest rates, what's going on in the housing market, where I'll be speaking, what books I'm reading, what articles I'm looking at, relevant things, just like you're hearing here on YouTube.
Super simple stuff. Just so you guys know, David takes a ton of pride and joy about how he reaches out and communicates with the people in his ecosystem. So this is not just going to be something where he dumps out a bunch of marketing emails, but instead he's trying to put out really, really relevant information that's going to help you, the wealth builder, to hit your goals and get to where you want, and just be a part of the things that David is doing and the people on the team are doing as well.
That is a great point. When I get like an apartment complex under contract and we're raising money and we're looking for investors, these are the people that hear about it first. If we're going to do a retreat, these are the people that are going to hear about it. If I have an opportunity to send like advanced copies of a book that I'm writing, this is where we go out to people. Or if we're going to be speaking somewhere and we just want to let you know we're going to be having a meetup or we'll be somewhere. All of that, like even the private Discord channel that we have, which, by the way, if you guys have done a deal with the David Green team or Spartan League and you're not in it, let us know. We'll get you an invite to DG's World on Discord. Lots of cool stuff that people don't realize if they're just listening to the Bigger Pockets podcast or just listening here. So if you go there, you'll get notified.
Awesome. Good stuff. Well, I hope everybody has a great rest of their week. Make sure, again, that you like and subscribe to this channel, because you know what? We're going to be putting out way more content that we have in the past. And we've already been seeing a lot of good stuff. Let us know in the comments what you think about the type of content that we're putting out on a regular basis. Do you like the thumbnails? Are they catchy? Some of them are like AI generated pictures of David. They're kind of fun to see.
Who makes those, Kyle?
Me.
That's right. Let us
if you
know
don't
if
like
you like
them. You can tell me that too. I can take it, because
they're the most unflattering AI generated pictures, but they are still very funny. So I give Kyle the permission to post them, but I look like a huge dork.
No, one of them I made you look really ripped. It was kind of cool looking.
I haven't seen that one yet. I've only seen the fat ones and the ugly ones.
No, man, you look like a gorilla. You're so big in one of them. It looks good.
All right. Thanks for all you do, Kyle.
Yep. Thanks, everybody. See ya.